Welcome back, traders. AMC closed the day deep in the green on Monday, but GameStop isn't faring quite as well. Are they finally starting to diverge from each other? Let's take a look at what the charts have to say. This is our short-term AMC chart, a 5-minute chart here that we've been watching on the live stream. And this price action intraday on Monday looks very similar to previous price history that we've seen just a week or two ago back in this area, where there was consolidation before a continued run higher. Consolidation before a continued run higher. That's what it appears to be playing out on AMC currently. There's a lot of buying pressure stepping up to the plate here, a lot of bulls. People were excited over the weekend about these assets, a lot of discussion going on even in the media. I've been recommending not to wait too long to enter these assets. If you are looking for entries, it's very tough to catch a nice dip. Bears were waiting all day and never got a real opportunity to buy in at a cheaper price. Throughout the day, the price steadily increased continuously. And at this point, I do anticipate continuation further into the rest of the week. Things are looking great for AMC, for the bulls right now. There could be some consolidation around the $13 level. That would be support. It's our new buy box. It's a very small buy box and a tight entry. But with the moving averages coming up here underneath, we could easily bounce off of this support line like so. It's just a matter of when. Will it dip first and then bounce? Or will it consolidate before a breakout? Perhaps even pre-market, the prices start to ride even higher. If prices start pushing $14.50, it could easily take off again very quickly. That's the kind of volatility we're starting to see on AMC. The move over that one day was as high as 30% long. And perhaps this channel, this parallel line with the other blue line, perhaps that is valid still, even though the price broke below there, like so. It just may not be quite in the right spot. If I drag it over slightly, the wick appears to be on top of this support trend line, the candles as well. Okay. So currently this is the support line. It's on a very short time frame, remember, so it's difficult to trade. This is a very risky day trade to enter or exit positions here. Holders are sitting comfortable right now. There's not anything to worry about on the longer time frames. So let's take a look at that. Here's the long-term chart on AMC. This is a daily chart now, and it looks great. It looks beautiful. Had a gigantic breakout from the $12 support resistance line. Okay, was resistance, it's now support. That's what I'm trying to say. Now that it smashed through that resistance line at $12, which is also a psychological level, and it was our first target as well. Short-term target was $12 right there. That target got hit easily. And now we're seeing an extension, an impulsive move up to our second target. Now our second target is coming back from our sell box at the gap. So I'll go ahead and drag that over once more now that the price is within the sell box. There's going to be some profit taking in this area. It's a little early to say if we will see a push higher right now. I'm going to be watching the pre-market and check in with the German markets alongside that analysis of the pre-market. Those two have been lining up together, the pre-markets and the German markets. When both of those have been green lately, the US markets have also opened green. That'll be a good indication for Tuesday. Right now, it's just in the middle. It's in the middle of our Fibonacci. And I was looking at the fib again. The fib can change, guys. It's not a static thing, and people do place it at different levels depending on their trading style. So we have adjusted this once or twice in the past. Now, if I were to remove it completely and just start over, okay, starting from the beginning of the breakout, going all the way up, most new traders and chartists will indeed place the 1 point of the fib at the high point of this candle, way up here at $20. This is $20. That's the first squeeze that happened in January, end of January. So the initial reaction is to place the fib like so. And it's not lining up with any other confluence in the candles. And that's why I moved it down lower to fit some of the candles better. About there with our sell box. There's a lot of price action in the sell box. So that's a strong range going forward into the future. Those higher prices are indeed resistance right now. That's where some people plan to take profits. It's a nice target from those lower entry prices. Nonetheless, the fib actually may look better even lower, guys. If I were to put it, let's see. So to demonstrate why it looks better even lower right now, because I'm thinking one step ahead of the markets, and I'm beginning to analyze future targets now. We've been avoiding discussing the higher price targets on AMC because we had to clear out some of these early resistances. Up around $10 was a big one. Once it cleared $10, it's flying up very quickly, very fast. This move may not take very long at all, the way things are looking. 30% in one day is a big green candle. Imagine 30% the next day on top of that. Can add up very quickly here. So going forwards, AMC may be so bullish that it goes all the way up to these higher targets, closer to $20 rather than $15. And a lot of times when there's a bullish breakout of that magnitude, okay, it's not going to stop there either. it may go higher than 20 temporarily. See a little extension beyond the old all-time high. Excuse me, local high, I should say. And so this is higher than the old local high. And that's normal. That happens often, frequently. So that's very possible to see a test even higher than $20 on that impulsive move. And the reason I don't like that is because I'd rather be conservative about this target. So moving it down to where I'd like to place it now. If I actually place the fib right here, instead of the 1 being up at the top of the candle there, watch this part, the 1 being right there. I'm going to put the 1.618 there at $20. This was a big enough move that it appears reasonable to do that currently based upon what we're seeing play out right now this week. So placing the fib there looks a little nicer because now we have a more reasonable target. The first target's right here at $20 conservatively. That looks good. That's once it's above the sell box. Okay, we still could see a lot of resistance in this sell box. It could go sideways, but once it is above that, it should hit $20. Now, beyond $20 is where it gets interesting, because now we have the next target right here at the 2.618, and that's at $30 even. So I do like this Fibonacci setup more than the one that we previously have analyzed on the longer time frame for this $30 target right here. And then the old all-time high is right in between these two at 35. And then the next target would be here at just about $40. So this is a great target range, this whole area currently. This is the sell box. That's the real sell box on AMC. Thanks. Moving on to GME. As I mentioned in the introduction, note all of the downwards pressure right now on GME. It's essentially pointing straight down. Compare that to AMC, which is pointing straight up, right? This is trending up right now. GameStop is trending down right now. It looks dangerous. People who bought at $280 are regretting it right about now. It's down at least 20% from that area. So AMC closed green 30%, GME was red 20%. I don't know if that was the exact number. No, it looks like 16.77%. But just about. That's a brutal move on GME. That's why I exited GME up in this area. We're seeing a lot of bearish indications taking place at the time, and those have played out right now. We're watching them play out still. So currently, GME is sitting way below all of our resistances. These lines are all resistances, which is a bad thing for bulls. However, a lot of our members out there are waiting for a nice dip on GME. And we're waiting patiently to see if perhaps GME will see an extension back closer towards $120 at this point. Because it's so volatile, it's still risky. It's risky to be bearish here. It's also risky to enter here. Keep in mind that from our $40 entry, GME is still up 461%. So it has a long way to fall potentially. And it does look bearish on the charts right now. I would like to see GME not only start moving higher, but also clear some of these old short-term resistances. Until GME reaches back up to $280, roughly speaking, Denwo's feeling bearish on GME, guys. Straight up. But it's not over yet. We'll have to see how the rest of the week plays out. And check back for more AMC and GME technical analysis updates on Wednesday, Thursday, and then our live stream on Friday. And that'll be 30 minutes before the markets open. I'll keep you guys posted while the markets are hot. And speaking of hot plays, here's CCIV. We were watching this a little bit during the live stream, so I wanted to show you guys the ending of the day here. And it looks extremely bullish, just like we expected. It is riding on top of all the moving averages on the short-term time frame, also the higher time frames. Note how these moving averages on the 1 hour are nearly straight. They're straight lines. You don't often see moving averages in such a straight shot like that, such a predictable manner, but we're seeing it right here on CCIV. Low risk, high reward. Thanks, guys. Happy trading. Have a great day.